that given the magnitude of this crisis and the fact that we're a New York-based firm, that we should do whatever is possible to help contribute for the first responders, for the different types of equipment that the governor is trying to find. And, we pioneered this special fund for first responders that he had. And we're also giving $5 million to different mechanisms for feeding people in New York, both first responders and other people in need with this crisis. What I'd say is what's had us do this, and why I'm going on TV today, is that I think it's important for business leaders all over the country to support their local communities. This is about as difficult a scenario and environment as you could imagine, and everybody's got to do something. And we're doing things beyond just this money. We're using our companies, which are substantial, to give other services, whether they're masks, food, free apartments. We're giving in the UK one of our facilities that's sort of like the Javits Center in New York, converting it to a major hospital for the UK National Health Service. And we have efforts all over. We're bringing doctors up from the South to work in New York. So I think that, not everybody can do what we do, but everybody can do something, not just in New York, but around the country.
No, it's a great point, and we tried on CNBC to highlight all the good news examples of companies that are doing their part, whether it's making masks, contributing money, sourcing equipment from China, and contributing it to the places in need. Steve, how do you think New York is doing? We saw some hopeful numbers today on hospitalizations and case numbers. What's your judgment as to where we are in this crisis?
Well, it's, all the medical experts say we're approaching, some type of crest. This will go on for a while. There aren't any yet miracle cures, and so I think we have to be prepared to deal with this issue. Just think about where we started. Almost every place in the country was way underpowered in terms of what they needed. And that was all over the developed world, the same thing. And there's been a lot of scrambling, a lot of creativity. I think we're going to see some interesting things over time from the medical area, and everybody's adapting. I think that's important, and we'll get through this.
Steve, what are you seeing through the lens of, hundreds of companies that your funds own right now in terms of the degree of economic damage that might be in store, and then whether the support efforts passed so far are going to be enough to sustain companies of all sizes?
Well, that's a great question. Let's just start with the context that when you close a good part of an economy, and it doesn't matter whether it's U.S. or some other place, and as cost structure remains in place, it's going to be a somewhat difficult time for that type of an operating business. Fortunately, the government understands that at the federal level, and they put in place both the stimulus program that just passed, some of the earlier legislation, and operations of the Fed. I'd give that really high marks. If they can get that money out to the people who need it, the unemployed people who will end up with, very high levels of financial support, with the concept being to bridge us over this 2, 3, 4 month period of economic decline, then we'll be able to come out of this pretty well. Without the government support on this kind of unprecedented, massive scale, and I believe there'll be one other supplementary stimulus bill as well, that if we hadn't had that, we would have had a dire outcome with all the government support. And a lot of people deserve credit for that, for sure, at the federal level. That with it, we're going to be able to get through this and restart.
Wanted to ask in particular, Steve, about your real estate portfolio. Obviously, Blackstone has built up a giant portfolio there over the years. A lot of people are worried about that sector because of businesses from restaurants to retail being totally closed, both in the short term and the long term. How are you thinking about the losses that you'll see in real estate?
Well, I think we're in quite good shape, actually, Sarah, in real estate. We've focused on warehouses, which are really needed, as well as apartment buildings where people are in them. We've kept away from the malls. We have a very small exposure to hotels. And so in terms of the asset classes we're in and where we focused, I think we're going to do fine through that. Of course, there'll be some people who are affected by the virus who, won't be able to pay rent for a short period of time. And there'll be relief on the other side, so we won't get into any difficulty, I believe. And so real estate for us remains a very strong area.
Steve, as we've kind of plunged into this crisis, it immediately generated some criticisms about how, companies arguably were unprepared and whether, in fact, corporate debt was too high. Stock buybacks, of course, have been under a lot of scrutiny and criticism and other things as well, whether it's even the corporate tax rate. Do you see us coming out of this now rethinking major elements of all those issues? And do you think you would be kind of even promoting any ideas for changing in any of those things?
Well, I think where we are is that, as I said, as a model, when you basically suspend large amounts of revenue from an economy for companies, you're going to feel it. You're going to feel it whether you're Walt Disney. You're going to feel it whether you're Macy's, who just, sort of laid off 130,000 people. So I don't know that the economy will go into some kind of dramatic change in terms of its composition. People always rethink things after the case. I think companies were basically in quite good positions overall. The banking system is extremely strong in the United States. So really, this is an unprecedented type of situation where you just suspend revenue. If you don't have revenue, it doesn't matter what your business model is. It's not going to do well. And the important thing is to make sure that we resume a normal environment.
What does that look like, Steve? I mean, what kind of time frame are you looking at, and how long do you think this sort of economic collapse is going to last?
Well, I think it's a little tough to say, Sarah, at the moment. My expectation is that people will be allowed to go back to work as soon as the medical people say that we're on the real downslope here. Bill Gates, for example, I think was on television recently, talked about 8 weeks from April 1st, June 1st. Other people would like to do it faster. Some people will want to do that slower. I think the circumstances on the ground will tell us when it's right to go back. And then I'm a personal believer in very large-scale testing as we come out of this, so that people can feel secure that the people they're meeting and the people who they're working with don't have any health problems. And it will take, I guess they call it in the trade now, massive testing, to help us before there are any medical useful to have people feel much more comfortable.
We know you've been one of President Trump's go-to advisors on the economy and the markets. I believe you were on that call a week and a half ago with him and the VP. What's been your message to the administration, and how do you think they've handled this crisis?
Well, Sarah, you know, one of the things I don't do is talk about what I say to other people where they're asking me for advice. And so on this one, I'm going to have to disappoint you and not share what I say in private. Even though if I did, it would just be between the two of us, I'm sure.
Yes, of course, and our good audience size. Steve, final question. You know, on energy, you've got some exposure there with the oil portfolio. What is this country's energy industry going to look like when this is all over? How many bankruptcies do you see, and how much economic damage do you think that's adding to an already painful period?
I'd say that the energy area now, along with the transportation businesses, are in the most pressured position in the economy. In the energy area, it's because of too much supply combined with much too little demand. When you take $100 billion barrel type of industry and remove, 10, 15 million barrels of demand, let alone supply more, you're going to have prices that collapse, which you've seen. I guess they got down to around $19 a barrel. And you're going to have significant shut-ins of production and less money going into exploration. And you're going to have to try and get this in balance. That is not a short-term possibility because it involves a lot of people making decisions. So I think that this will be probably, if I had to put myself to a test, this will probably be the last area that normalizes coming out of this crisis. Steve
Schwarzman, we appreciate you phoning in.
It's my pleasure.
And, of course, all the good that you're doing in New York with those new relief efforts contributing to healthcare workers. Steve Schwarzman is the CEO of Blackstone.